well after a disappointing year where they've underperformed the S&P 500. So again, we're looking for really good top-line growth, margin improvement in companies, those stories that'll work throughout 2015. We spend a lot of time in the technology area. We think there's some really good tailwinds there. We think the stronger dollar will help a certain group of investors out there. So we're looking for those plays right now.
All right, we had to wrestle Trent Wagner out of a pit in one of those pits of the CME. Trent, let's start talking about gold, if you don't mind. Why the big bump in gold today? Was it just short covering or what?
I would attribute it more than anything else to short covering. I mean, obviously at this point in the year, it's well documented. The volume in a lot of these markets is down. Historically, the $20 move in gold isn't that big of a deal. When you take a look at a chart, not to get too technical, but that 2050 area in gold is really the one to watch. If we stay contained underneath there, I'm still in the camp to echo the previous gentleman. The stronger dollar is going to be beneficial to certain areas. Gold is not one of them. I think we will continue to see that stronger dollar narrative as we move into 2015, which isn't going to be good for the metals at all. So I would advise selling rallies on anything that gets up to that 1250 area in the gold market.
You know, John, one of the things that we've seen for 2014 is the shift from emerging market economies into a domestic economy like the U.S. The U.S., many say, is the better market to be in. But what about other first world markets? Should we be looking at Western Europe?
We actually are very interested in the developed international markets. What you're seeing, and what we hope we see, is that the Europeans begin a QE program. But what's more important, and what your viewers should really keep an eye on, is Europe making the structural changes, the tough decisions to improve their economy, to improve workers' flexibility? That will tell us that now's the time to add to international markets. We've been underweight for 3 years. We would like an opportunity to add to international markets.
Okay. It's probably not going to happen at a place like Greece, by the way, which is about to elect a far leftist prime minister. But, Chris, we know that we're going to get it. While the rest of the world is getting more loosey-goosey with regard to central bank policy, printing more currency, we are tightening up a bit. Interest rates are probably going to go up in 2015. How are the markets going to take to the interest rate hike here?
Well, I think if interest rates are going up, it's because the economy is doing pretty well. So we're going to, again, be looking for the growth to continue to power through. We think that'll support valuations for the near term. Could we see a correction in the first half of the year? Certainly could. But right now I think the economy's doing better. We're going to be lapping some of the comparables of last winter, which we all remember was a terrible cold hit to the economy.
By the way, let me just ask, when do you think we're going to get that rate hike in 2015?
It probably is later in the year because the central banks across the globe are going to be putting pressure, which is going to be impacting the long end of our interest rate curve. So I think that it's going to be probably later in the year, if at all.
You know, Trent, one of the things that we've been watching, and obviously the volatility is going to kick in towards the end of the year because of low volume, but for 2015, many traders have told us already that they expect a lot more volatility for 2015, and that's going to make it a little more challenging, even for the average investor, to know when to put money in and kind of where. What is your sense on the volatility side for next year?
Well, I think a lot of the volatility coming into play this year over 2013 was due to the fact that we were wrapping up that stimulus package here. Until we get a rate hike, though, I'm not sure how much more volatility we're going to see in 2015 over and above what we saw in late 2014. I mean, we actually had a decent amount of volatility in October and earlier this month as well. I'm not convinced they are going to raise rates next year. I would agree with the gentleman earlier. If anything, it's going to be late in the year. And at that point in time, I think we may see a jump in the volatility. But I don't know that we're going to get much more in terms of the volatility increasing over and above what we've seen in the fourth quarter of this year.
John Trainer, what is your biggest concern for 2015?
The biggest concern that we have is sort of the unwinding of a lot of the great investments that we've seen over the last several years, and a lot of them have been yield-driven. High-yield bonds, we saw high-yield bonds trade off pretty aggressively this fall, and normally they're tied to equity performance. They did not rally back with equities. So high-yield bonds, we're underweight REITs right now. REITs have had a fantastic year. We're at a 50% weighting on REITs. So it's those yield plays that have done very very well that we're most concerned about as we move into next year. And we would agree with the prior two speakers. We think the Fed will raise rates, but we're in the latter half of next year, not early.
All right, and Chris, before I let you go, just a couple of names I want to get out there, because I know that you like a company like Express Scripts, and I'm always kind of looking for what might be the new hot stock for 2015. Express Scripts, healthcare play, you like it?
Yeah, Express Scripts continues to do well. I think it shows its power with drug pricing. It's been in the news recently with Gilead. But I think longer term, you're bringing more people into the healthcare system. They have insurance. They need a PBM. They provide a lot of value to the end consumer and drive a lot of cost out of the healthcare system, which I think is what we need.
All right. Well, John Trainer and Chris Retzler, thank you very much. Trent Wagner's going to be joining us back there for the S&P Futures close. We're going